All right, we're back. This is the rundown, special edition, Norway, Vetla Forslad. How are you doing today?
I am doing great. How are you?
I am doing great. This is actually
Awesome.
the real special edition, is a margarita equals a daily dose of vitamin C. And I'm going to talk a little bit about that. I was up late last night. I came across an interesting article in the Financial Times I thought we could talk about.
Yeah.
So first thing to do before jumping into it, this is also, we have so many special editions. This rundown episode is sponsored by QuickFS. Go to quickfs.net. Quick financial statements if you want to use what Geoff and I use every single day to get the financials and the financial ratios and just all historical information on a company that we use to analyze the business. Go to quickfs.net, and if you sign up, I believe it's only $35 a month. There will be a survey at the end where they'll ask where you heard about the company, and you could click the bubble Focus Compounding, and that will support the Focus Compounding podcast and the rundown. We're sellouts, Vetla. We're sellouts.
Well, you're sellouts to a great website. I use it all the time as well. So
you're a smart
man.
man.
With being a sellout, yeah.
You are a smart man.
I always use it like if I have a new stock idea, or if I want to look deeper into a company or just glance at a company, I'm just gonna pull up QuickFS because you get like a nice overview of a bunch of things.
Yeah, no, all seriousness, we use it all the time. We love it. My favorite part is to actually download the financials in Excel file, and it like pre-populates kind of like a financial model that you could just build off of yourself. So I use it all the time.
I don't have the premium though.
What's that?
I don't have the premium version of it.
Oh, well, if you get it, make sure you let them know that you came from Focus.
I got it from this podcast.
This is the first time you're tuning in on YouTube. Hit that subscribe button, thumbs this video up. Follow both of us on Twitter. Mine is at Focus Compound. And Vetla, what is your Twitter?
It's at Vetla Forslad. You probably don't know how that's pronounced or anything, so just check the description below and and follow there.
That's right. All right, Tesla. I don't want to make this a show about Tesla, but how can we not talk about it when there's news every single week on Tesla? Elon Musk came out, it was yesterday, saying that if the county that one of his facilities was in does not allow them to start production again, that he was going to sue them. That happened Sunday. He sued them, or started the process of suing them. And then yesterday he tweeted out saying that they were starting production. And if anyone wants to arrest anybody, he hopes that it is going to be him on the front line with the workers. So that was quite the scene. Kind of poetic in a way, kind of heroic in a way.
Very over the top. Very over the top.
Yeah. Any company right now is obviously they want to start their business, Tesla included. Do you have any general thoughts on it?
Yeah. He's been talking about freeing America in like a Trump-esque tweet storm for over a month now. And I'm not really buying it at all. I don't think he doesn't have any incentive at all to talk about freeing factory workers or freeing his county, except maybe for PR. As he loves the role as a celebrity CEO. But I think he's more focused on Tesla's cash position and their financial position, as you said, because these are trying times for companies, especially for companies without a lot of cash. And I honestly don't think he can afford to keep the factory shut down for, a longer period of time. And it's been shut down for about maybe a month now. So I think Elon is getting desperate. I think they're bleeding cash. They need to fill their backlog in order to save the quarter. I mean, this quarter alone, they haven't really produced any cars in the United States at all because it's been closed in Alameda County. Yeah. So I think he's freaking out on Twitter right now because of the bigger financial problems that they have. And I also think that investors might think that they have more cash on their balance sheet than they really do. There's many interesting blog posts on Alphaville on Financial Times that talk about this, that there's always been a difference between the cash balance on Tesla's balance sheet and the implied cash balance if you look at the interest yield. So they make it seem like they have a lot more cash on book at the end of the quarter than what it is on average during all of the quarter. So I think their financial position is worse than they have disclosed. And I also have a tiny conspiracy theory, which is probably wrong.
Let's hear it.
The reason why he tweeted that the stock price was too high was because he tried to raise money, or he tried to call Goldman Sachs, and he was like, "Hey, we need money." and they probably maybe said that there's no way we can raise money for you in this environment when your stock is at like $800 per share.
I literally thought the same thing. I said that on the podcast with Geoff the other day, and and Geoff said that if he was Elon, and Elon's probably like this as well, right? Elon, he's not. I mean, he's not stupid, right?
He's not stupid.
Geoff's like, if I was Elon, I would be very worried as the stock price continues to go up and go up, because you're just furthering the expectations and everything. But he just also got like what 700 or 900 million.
Yeah. Oh yeah. Oh my God.
Payday. Yeah. But I mean, that's not cash, right? He's still.
No, I think
it's I think it's like more options or something like that in the company. Yeah. So good for him. I guess good for shareholders. The stock's up $100+ I saw you tweet that today, since he tweeted out that the stock price was too high. But look, any company, and this is not us picking on Tesla, any company, if they want to start, or if they feel like they have to start, like they're going to want to start because they need revenue, and any business is like that. Any company is going to bleed, the more that everything is shut down. And President Donald Trump tweeted out today that they need to let them start up, and that Elon is right. So, and he didn't get arrested.
Can I come with another conspiracy theory about Tesla?
I love it. Let's hear it.
Or about Elon Musk? Yeah, I'm on a roll today. Okay, so he is, the liberals were usually the Elon Musk stance, and, conservatives were kind of against Elon Musk, I guess, because they're not, all crazy about the green energy thing. Yeah. And I'm not picking any sides here, but what if he's pivoting from a liberal CEO to a conservative CEO, because the company Tesla is pivoting from selling sedans to selling pickup trucks?
Yeah, it's interesting because he pissed off a lot of people in California, including workers that thought they were doing the mission. Now this is all selected stuff, right? I'm confirmation bias. I'm seeing what I want to see. For everyone that hates him, there's someone that loves him. But I saw a lot of people that were like, "What? You're gonna go to Texas of all places? Like the most conservative state." In the United States, quite frankly. So, it's been quite the story, man. It's a lot of fun to follow. No position. You said you don't have any position. Geoff and I obviously don't.
Yeah, it's just fun to watch.
It's going to
be one of those fun. Yeah, it's going to be one of those financial stories that we are going to talk about. No matter how it ends, we are going to talk about it for decades, is my guess.
Yeah. I mean, at some point you do have to think, right? Like, he is under such a microscope where it makes you think, like, I don't know, like at some point, do you think if Tesla really was a fraud, they would have found out by now? But I mean, how could Bernie Madoff run a $50 billion Ponzi scheme? And, I mean, stuff happens. I'm not saying Tesla's a Ponzi scheme. I'm just saying, like, at some point, if anyone's under a microscope,
but
I think it's him.
Of course. But I think that when, Tesla Q calls it a fraud, they're not really saying it's an Enron fraud, like an Enron level fraud. I think the worst thing I've heard about Tesla is that, from a credible source, is that their accounts receivables are a bit high. It's not like their profits are fake. It's not like their revenues are fake. People are rarely saying that their production is fake. So, and I agree with you. If any of those things were fake, then we would have found out by now.
So it's really like a fundamental thing.
Yeah, and people are saying that Elon Musk is a fraud himself. And I can definitely see the argument for that he may not be like some genius engineer. He's more like a salesman.
I think he's a genius, quite honestly. I think he's pretty smart, but that's just my opinion. Anyways, don't want to make this a Tesla show. Hope Tesla's successful, right? We don't have any position in it.
Yeah, all I hope Norway is that the second largest. Norway is the second largest market for Teslas. There are like Teslas all over Norway.
Yeah, it's been a lot of fun. All right, tequila. Do you like tequila?
Yeah, I think it's fine. It's not my cup of tea. It's not my cup of tequila.
Yeah, I'm in the same boat. But last night I was reading the Financial Times. Do you say finance or financial? Or finance? Or
in Norway,
finance?
I would say finance. So finance. But
I like how you say EBITDA. I like how you say EBITDA. You say EBITDA.
Yeah, is that wrong? Should
I don't know.
Not say that?
No, you say it the way you want to say it. Somebody's it's funny. It's cool.
Okay.
So I was reading yesterday in the Financial Times, and tequila sales are up 60%, which I thought was interesting during this pandemic. So a lot of people drinking tequila. And just some, stats behind it. 70,000 jobs in Mexico tied to tequila. And they consider, or they say it should be, but it kind of is, beer an essential business in Mexico because 70% of, this is their words, 70% of Mexican families buy beer each week in Mexico.
Wow.
So that's pretty crazy.
That's crazy. Yeah.
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 So that's why special edition, a margarita is for some people, it's a daily dose of vitamin C.
Yeah.
Good
That's one way to put it. Sure. Yeah. Just don't make it a habit and you're fine.
Yes, exactly. Have you ever studied any beverage businesses?
I have sort of looked at Anheuser-Busch, which is a Belgian brewer company. They are behind Budweiser. Their ticker is Bud, and they're also behind the production of the Corona beer actually outside of the United States. And if you give me 1 second, I'm not gonna do it. But it's been hammered this year. It's down. I think it's down like 40% this year, partially because of its exposure to the because it creates Corona beer. And there are people out there that thinks that there's some kind of correlance between the Corona beer and the coronavirus. So I think it's stupid that it's down this much year to date. When you are saying that the beer market, and by beer I mean the drinking beer, not the actual beer market, that the beer market is actually doing kind of well right now. People are still buying drinks. I mean, of course they are. So I would think that their revenues this year is not going to be horrible. So in that regard, just remember this stock is down 40% this year. So I pulled up some numbers, and they have a free cash flow yield of over 10%, a free cash flow margin of over 20%. 10-year revenue CAGR, or compound annual growth rate, is 9%. 10-year return on equity, 15%. They're trading at 5 times EBITDA. And
say it the real way. Say it the way you say it.
5 times EBITDA.
There you go.
And their bonds are yielding negative. If you buy their bonds, you get negative interest rates, which is insane. Wow. Now, granted, they have a lot of debt. They have some debt. But I think it's an interesting company that you can look at if you want exposure to a beaten down beverage company.
Yeah. Beverage businesses are, I think, great if you could, sort of hitch your wagon to, like a good business. And Geoff and I, we've looked at a few. I'm always drinking in the podcast. I always drink Celsius. That's one of my favorite energy drinks. And it's funny because I was talking about yesterday, if you ever see me on the podcast when we're filming next to each other and there's like a can that actually looks like a White Claw, it's a Celsius. And they're a public company as well. But I always joke, I'm like, I get super self-conscious drinking the Celsius drink because it looks like a White Claw. And when you drink energy drinks, I usually drink them. It's healthy energy. I drink it at, 6, 7, 8 a.m. and I'm in my elevator going downstairs. And I feel like I always have to like turn the logo to people in the elevator so they don't think I'm, drinking in the morning on a Tuesday.
I'm not an alcoholic.
On a Tuesday. I'm not. I know, right? But no, I know somebody who they sold their water business, of all things. They were doing 30 million in revenue, and it sold for 300 million, so 10 times revenue. And the multiples that they just go through are just crazy. And what matters most is, in my opinion, it's distribution, shelf space, and just like marketing it. It's really, in my opinion, it's just a marketing. It's a marketing company. I was actually talking to that guy. It was a friend that was telling me the story. And he's like, you need a couple things to have a successful beverage business. You need a drink, right? Obviously, that's good. And then you just need a story behind it. And then if you could throw on like a celebrity's face on it, that's sort of like the triple whammy. So you look at like water, and then it's in, the water comes from Fiji, which is some healthy water. And then I don't know who they have that's attached to it, but you could look at like vitamin water, for example. 50 Cent was like the face of it. Casamigos.
Didn't Jay-Z have something like that? Like the Jay-Z water?
Yeah, probably.
We had Trump water.
Yeah.
Trump water. I don't think that it was successful.
Trump steaks.
Trump steaks. Trump Monopoly. Trump University.
Trump, hot topic. No, but that's funny. But
and, one more thing about the water business. There's also a water company in Norway called Voss Water. You might have seen it. It has like very classy glass bottles. Yeah.
Yeah,
Voss.
I love Voss. Yeah.
Yeah, it's normal Norwegian tap water. That's what it is. And one of the largest investors behind it is Dwayne "The Rock" Johnson, which I find funny.
Yeah,
so
that's
for me, this is like a normal thing. Like Norwegian water is nothing special to me. I've grown up with it, but apparently it's worth like billions of dollars to investors.
Maybe that's why you're so tall. It's like special water, right? Aren't you 6'5", you said?
I'm not that tall. 6'3".
6'3", so that's so tall.
6'3".
That's
yeah,
so tall.
Still pretty tall.
So Dwayne is actually, he started his own tequila company as well.
Oh, really? Speaking of the Rock.
Yeah, speaking of, I mean, so
tequila, yeah.
Casamigos tequila, that's George Clooney. And you think about, so that's hit the face, when I was saying you need the face of it, and then the story behind it. And the story behind their tequila is, we were in Cabo, and him and his neighbor, they would make tequila for their friends and family. And it was just something that they did as a hobby. And then all of a sudden, like, oh, we should sell this. And then I think he ended up making like $300 or $400 million on the brand, which was more than he made in his acting career in general. So, I mean, just beverages, if you could seriously find one that just takes off, they just go for crazy multiples, and you can see why as well. I mean, they with the synergy and distribution and cutting costs and like all that sort of stuff, you know?
I mean, there's a company called National Beverage Group. They own La Croix. That's how we say it, right? La Croix.
Yep.
Yeah. So the ticker is Fizz, and they make flavored soft drinks like La Croix. And there was like a period like in 2017 and 2018 where La Croix was super popular. Like everybody were drinking it. And so the stock price went from like $14 in 2013 to at the top $120 in 2017. So we went up like almost 10 times over a couple of years. And now it's back down to $50 per share. Yeah. So because, there was like a bubble mania around La Croix drinks, which I don't really get because it doesn't really taste anything, but
Yeah, it was Geoff and I, because Geoff looked at the company and it was really geared more towards women, I think. So you have the carbonation, and it's supposed to help like be like a people lose weight, men too as well. But I think that's who it was targeted towards more. Right. But yeah, I never liked the drink that much. But this past weekend, I was just thinking of different ways to, just different industries, different companies to look at that haven't been that affected by, COVID and the pandemic. And I thought that was interesting that tequila came up yesterday, but I was actually reading up on a company called Flanagan's. It's a smaller overlooked stock. They own liquor stores in Florida, but they also have, I think, 18 restaurants as well. So I was like, probably not. But I was just reading. I mean, tobacco, alcohol, all those sorts of companies obviously have been okay during the pandemic.
Except Anheuser-Busch, the Corona beer owner.
Yeah. I mean, not the stock price, right? I mean, is that a company that you would like to potentially, I mean, like in 10 years, for example, 5 or 10 years, do you think that company will be higher than where it is today?
Yeah.
Be doing more and earning more?
Yeah, I think so.
Yeah,
I think so.
It's interesting. Next topic, the Fed. They're buying bond ETFs. It's unprecedented.
Yeah. It's
Thoughts?
Insane. It's like you said, it's unprecedented. They have never done this. I don't think they did it during the Depression, but at least in modern times, they've never done it, even though we've been like in the most dovish monetary era in history. So the Fed refused to do this even during the financial crisis of 2008. So now they're finally going to bail out some investment grade companies through their ETFs. And these are often companies that have spent billions and maybe even trillions of dollars on stock buybacks instead of building up a cash pile to save for a rainy day, which any sensible management should have done during that time. So I feel like when you do these measures, you are almost incentivizing people to not take any risk or take a lot of risk and leverage your business and then wait to be bailed out by the Fed. So to me, there's like two roads ahead from this. There's one where the Fed is kind of, in some senses, destroying price discovery. Free markets become less free, and the system is kind of undermined because investors know that the Fed will always have your back. But on the other road is that we just become more Japanified, that all of the Western world, because of age demographics and because of low inflation, we're going to just become Japan, because Japan has been doing this for years. And the Swiss National Bank has been doing this for a couple of years. So if we look to Japan, then maybe the United States is just going to become a country with endless quantitative easing, negative interest rates or zero interest rates forever, low inflation forever, low growth forever, an aging demographic that saves a lot of money and doesn't really spend a lot of money in the real economy. So therefore we have a low growth. Therefore we have low growth. And then on top of that, we have a Fed that buys bond ETFs and maybe eventually stock ETFs, if we all do become Japan. Now, you can argue that the United States has some demographic differences that makes her more safe against from becoming kind of like Japan, that we can still have inflation, we can still grow because of the demographics in places like Norway and places like the United States. But it's unprecedented, as you say. Are you like outraged? Do you think that they're destroying the market, or what do you think about this?
Yeah, I mean, there's this whole idea of like price discovery, which you have alluded to in the past. And I think I do agree with that. The part that worries me, and you hit on this a little bit, was the incentives behind it. It could start to just create the wrong incentives of, well, if, everything goes bad, we could get bailed out. And if they start to, buy ETFs on stocks, I think that's going, stock ETFs, that's going to be an issue. And I do think the Fed, they acted quickly when everything happened. They did what they had to do. The market would probably have fallen a lot more if they didn't step in and, do what they did. So I think it's good, but it's, in a way, I do think it's like capitalism on the way up and socialism on the way down. And I don't know how good that is. And I do think it starts to make the wealth gap bigger. It's really good for rich people. But people that aren't, wealthy, or I guess you could say the average Joe, whatever that is, it's not necessarily good for them. So I think that's an issue. I do think it's not a good, I don't think it's good standards to set to bail out companies that, for example, have just been terrible businesses. Like you said, maybe they bought back a ton of their stock instead of building up a cash pile. And I understand the whole stock buyback conversation has become really politicized the past, since COVID has happened, but take that out of it. There's a bunch of oil companies where the economics just don't work. They haven't worked. And if there was, either no capital markets or low interest rates, they wouldn't have been able to, raise so much money and just destroy, shareholder value over the past 5 to 10 years. So I think that's an issue if you're talking about bailing out those type of companies. So it's really like, and then you run into the issue of, well, who do you bail out? Are you going to bail out a J. Crew or a J.C. Penney or a retailer that if you don't bail them out, they're probably just going to go bankrupt in 5 years or sometime down the road anyways? So it's like, what do you do? And I think it's a tough thing. I wouldn't want to make those decisions. I don't think it's necessarily good because the incentives that it sets, like you said earlier, it's crazy, quite frankly. It's up.
And it's like the Fed had to step in order to prevent this broader economic, almost medical crisis to spiral downwards to like a financial crisis. And that's what they did. They stepped in and they came with all these measures in order to provide liquidity to the market. That's what they did. They came in and they were just clear as the day to say, and they just said that this is not going to be a liquidity crisis. We are going to be there no matter what your issue is. And that's good in one way because you prevent a depression and you hopefully prevent a depression and you hopefully prevent like a broader financial crisis. Banks are not going to go under. We're not going to have a lot of defaults, but at the same time, you can't control who you save when you come with these broader measures. So what you're doing is that you're saving both the companies that, would have survived, I guess, but you also save the companies that in a normal recession would have gone bankrupt. And that's in a capitalist society, bankruptcies are arguably good because it, clears the system of bad companies. And when some of these measures are definitely gonna keep zombie companies alive, and we don't really need more zombie companies. So the monetary policy of the modern age is definitely helping the financial world see more zombie companies and companies that probably would have gone under in a more free market.
Yeah, I mean, it's
It's like you said, what you're doing is you're kind of privatizing the profits and socializing the losses. And I think if I can add one more thing to it, I think that we're going to see like a lot of populism from this, because the stock market is at an all-time high and the unemployment rate is at an all-time high. That's, and most, if you study historical populist movements, they've all stemmed from like this big gap between the rich and the poor. So I think it's, especially in Europe, it's going to be interesting to see what's going to happen with the European Union. Are they going to last for 5 more years or a decade more? Maybe not. It's possible that it's going to collapse.
And I mean, you could talk about like the deficit in the United States as well. And then they were talking about potentially lowering taxes again on like corporate taxes or capital gain taxes. I'm just like, man, just continue. You just, you know what I'm saying? It's just not good, I don't think, for the long term.
Yeah. One more question for you. Do you think we are going, so right now the Fed funds forward curve is pricing negative rates already in November. So do you think that we are going to see negative interest rates in the US, maybe even this year? Do you think we'll see it at all?
Well, I think Trump tweeted today that
he wants
it. He would like that. It wouldn't surprise me. That's all I'll say.
Yeah.
It wouldn't surprise me.
It would actually surprise me a lot.
Really?
Because I think the first country that had negative interest rates was Denmark and maybe Sweden. But they recently raised rates from negative interest rates to zero interest rates. And not because the economy was booming or because they had inflation, but they did it because they saw the damages that negative interest rates did to the financial system, because what it did to the banks. Because, one thing is low interest rates. Banks are, not necessarily going to like that, but they're going to get cheap funding. But, and it's not going to damage the whole financial system. But what Denmark saw and Sweden saw and what Europe is seeing is that negative rates is very damaging for the financial sector versus low interest rates. And even, Neil Kashkari, he's like the most dovish person in the Fed. He's active on Twitter. He's even trolling, Rudy Havenstein and those guys.
Yeah.
Even he said that he doesn't think there's going to be negative interest rates in the United States. And I feel like if he thought there should be negative interest rates, he would have said it. So, I think, of course, I don't know. I'm not betting on anything, but I don't really see negative rates happening anytime soon.
Yeah. Well, I would hope not. Saudi Arabia. Tell me about it. You want to talk about it?
Yeah, I want to briefly talk about it. So today they announced several cost-saving measures for the broader economy, and they raised their value-added tax, which is something they have in Europe, by like 3 times. And the goal for them is to narrow their budget deficit because their revenues have collapsed this year, understandably because of the oil price. So the Saudi Arabian economy needs cash quickly. It's what I'm gathering from these news. And that's interesting for the financial markets because of Saudi's big sovereign wealth fund, which owns big stakes in several international companies, kind of like the Norwegian wealth fund. In March, they bought stakes in several big European oil companies like Norwegian Equinor, British Shell, and Total, which is French. They own 5% of Uber, and I think they own a stake in Lyft as well. They own almost 10% of Carnival, the cruise line.
Yeah. Mm-hmm.
And I think they used to own a stake in Tesla. I'm not sure if they sold it or not, but I remember they bought a stake. And the most important thing is that they are very important investors in the venture capital market in the US. They are very generous. They gave money to SoftBank. They were the number one source for capital for the Vision Fund, which you might recall from the WeWork scandal. So the only reason SoftBank was able to do what they did with WeWork, and the only reason why SoftBank has invested so much is because of Saudi Arabia. And SoftBank is already in a lot of trouble after losing $16 billion last year. So I found it interesting that Saudi Arabia seems to be in a bit of a financial squeeze right now, and that they're looking for ways to cut costs. So I wouldn't be surprised if the next move is to sell a lot of these stakes. So my question is, what would that mean for like Uber or Carnival or maybe even WeWork or the venture capital market? I mean, it would surely not be great for it. What do you think?
Yeah, it's interesting. I thought the whole Saudi-Russia price war was like the ultimate chess move in a way. So they came out, right? They tanked the oil market. And then it was like, a couple weeks later, there was announcements that they took a large stake in Carnival, which you said. And then like four, like massive oil companies around around the country. And then they made this deal that they're going to, or started to progress towards coming up with a deal to hopefully
the OPEC plus production cut.
Stabilize the price.
I didn't even think of that. That was an insane chess move, because I don't know about Shell or Total, but Equinor is up like 60% or something from the March bottom. Like, even though the oil price is, Brent oil is trading at like $30 per barrel, which is super low in a historic perspective, but it's still up like 60% from the lows.
Yeah. So I thought that was, interesting, but yeah, I mean, we'll see what happens, right? Where's oil at right now?
I'm not sure about, I think $25 for the WTI and $30 for Brent.
Yeah, it's at crude is at about $26. The future the contract that I'm looking at, but yeah.
So Brent is like 31.
Yeah. So it was. I don't really have an opinion on it. I thought it was just a very interesting situation.
Yeah.
I guess we'll see what happens. I mean, do you think they'll sell their stake in Carnival already? I mean, that was such a massive stake. Would they buy like 10% of the company?
Yeah, 10% is a lot. I don't know, to be honest with you. I'm not really seeing the motivation behind it. Are you just trying to make money? Is that the deal? You're just investing?
Yeah.
Yeah. I don't know.
But for Uber, for example, Uber came out today saying that they're going to acquire Grubhub.
Oh, that's true. Yeah.
Did you see that?
I did see that. I don't know anything about it to comment on it, but I'm kind of wondering where did Uber get them? Oh, they're just diluting their shareholders.
Yeah. They
don't have any cash.
So it's funny.
Get the money?
Yeah, that's the tweet, right? I gotta look to see. I don't think Grubhub is that profitable as well. So I was like, the 10+ year startup that still isn't profitable is going to become profitable by buying another 10+ year startup that is not profitable.
Yeah. What are the synergies when you buy a company that loses a lot of money, that buys another company that loses a lot of money?
Yeah, it's insane. I mean, if you want to talk about the trade, a pretty good trade, you could talk about Uber's CEO, ex-CEO Travis Kalanick. He sold, I think, all of his Uber pretty much at the beginning of the year, or maybe last in December or something like that. Now he's doing cloud kitchens for restaurants. Yeah, which would have come in handy. What that means. Which would have come in handy. The way I understand it, I could be completely off because I haven't really studied or anything, but it's like restaurants if they need to like almost like outsource restaurant or like kitchens.
Oh wow!
And they'll like cook for them and stuff like that.
Well, that's kind of smart these days. That was like an incredible trade.
Well, him selling Uber, yeah, but it was just funny that the news came out. I haven't looked at anything because as I was sitting down, I saw that they're going to acquire Grubhub. So I thought that was interesting. Cool. Do you have anything else for today on the rundown?
Nothing to add.
Nothing to add. That has nothing to add. Well, I want to thank everybody so much for tuning in with us today on the rundown. This special edition is brought to you by quickfs.net. Go sign up, $35 a month. And if you tell them that you came from Focus Compounding, that helps support everything that we're doing. And we're definitely very appreciative of that. Make sure you follow Vetla on Twitter as well. And we will see you in the next rundown.